Hello everyone, welcome to the IchimokuCharts.com daily analysis for the US dollar index for Tuesday, July the 5th, 2011. Well, a green body candle today, and it's the first green body candle that we've seen for quite some time. The previous 1, 2, 3, 4, 5 candles were all red body candles, some fairly large red body candles in there as well, so quite a change of sentiment in this market today. We've seen the bulls take control of this market, close the market up towards the highs, so they're showing very strong commitment to taking this market higher as well. It's the first time that we've seen the bulls make any substantial net bullish progress on the day between the open and the close for some time. Now, in candlestick terms, this is also a potential change of trend, and we have a prior downtrend, and we have a bullish candle engulfing the body of the previous candle. And that suggests that there is potential for a bullish reversal. That's a bullish engulfing candle. And they can be quite significant changes of trend. So there is good potential for the market to start trending up. Although we haven't had that change of trend yet, we would need to see the candle make a higher high and a higher low to begin a new uptrend in the first time frame. Now, we did see the market find some resistance within this area just above the window that was open previously, that we mentioned previously here. It's a gap between these two candles, and that opened a window in candlestick terms, and the market just closed at the top of the window. So it's almost closed the window. We can see a small amount of downside price rejection as the market tested just above the window and tested at the Kijun-sen, the pink line here. So a small loss of commitment from the buyers. Having said that, however, they have penetrated a fair way into the window and have almost closed it, but not quite. So that's quite significant for this market. The market will need to trade up through there to close that window, and that window will once again offer itself as resistance for the next trading day. The market is now trading within the Ichimoku cloud, and we can see here the cloud, and that tells us the market is neutral in big picture terms, having been negative for the previous two trading days and bullish for the previous few weeks when the market was trading up above the cloud, so a neutral market. The market is now trading down below the Kijun-sen, but only just below, so almost a neutral market in terms of the medium-term time frame, but still trading down below the Tenkan-sen, the green line here, so the market remains bearish in the fast-term time frame by trading down below there. Now, if the market does trade up through this area, and we do have this previous zone of support and resistance at 75 that the market will need to trade through as well as the top of the cloud, we do have a fairly large zone of potential support and resistance, and I've highlighted this with the yellow, where we saw downside price rejection a couple of times as the market traded into there. Then we saw the sellers losing commitment as the market was trading up into there, and then the buyers losing commitment as we tested there. And that area, the market has traded through there, so that weakens the strength of that somewhat, but we still should look to that area as a potential area of resistance for the market. If we do trade up through that region, then we do have potential resistance at the Tenkan-sen at 75.55. Following that, no strong resistance until we trade up to around 76.60, although we can see the shadow on the top of these candles all the way up through from 75.5 roughly up to that 76.60. So an area where we could potentially find resistance, but not strong resistance until we get up to about 76.60. So for the next trading day, we do need to watch the high of the current candle for a potential higher high and higher low, and potential confirmation of the bullish engulfing pattern. But certainly keep an eye on these areas of resistance that we've highlighted previously. To the downside, below the current candle, we have support down at 74.31, but then no major support until we trade to 73.87, and then down to 73.50 at the major swing low.